Good afternoon, folks. It's January 25th, and I wanted to wish you all a happy new year for 2024. It's the year of the dragon, and I believe that it is also the year of prosperity for many. But those opportunities will be probably finding a needle in a haystack, to be honest, within the crypto field, if you're looking for 1,000x gains. And we're not here to discuss those types of opportunities, which are predominant in the crypto field. But at this time, I would like to discuss the volatility and what's happening with the buy the rumor, sell the news event, right? So on January 10th, the ETFs for Bitcoin were approved. About 11 ETFs were approved so that Wall Street can now come in and officially buy and own these Bitcoins. With having said that, the volatility you see or experience currently is related to the asset class. There was some hype because of these ETFs, and BlackRock and Fidelity, those two, arguably some of the biggest market movers on earth, they decided to come into this realm, right? Now, what that does, you might have been aware of this. There's another company called Grayscale. Grayscale has been involved with the crypto industry for quite some time. And at one point, people, namely some brokerages, can or would have been able to buy and purchase Bitcoin at a 50% discount. That's due to Grayscale, selling that GBTC for 50% less than what the official BTC, spot BTC was, priced at that point in time. Now that the ETFs have been authorized by the SEC, which also includes GBTC and Grayscale's ETF application, what's happening is there's a sell-off, which if you own GBTC, you would actually be able to sell that at full market value, right? Which, let's say last week was $49,000 US. You could have actually sold those all throughout the week, beginning at 49 all the way down to 40,000, but not for the reasons that you may think. So because of the fees and the high-priced fees at that for Grayscale, in comparison to these newcomers on the block, namely the BlackRock and Fidelity, etc., they've been pressured to reduce their fees, which will put them in direct competition with some of these other older players. So people are actually moving their money from Grayscale over to these new BlackRock ETF funds, which is called, the ticker is called IBTC, and Fidelity, which is another large one, their ticker is called FBTC. So people are actually, brokerages are selling their Bitcoin and buying and repurchasing under the new companies, right, which have been recently authorized. That puts them at an advantage because they save on fees, right? So this volatility is going to be temporary. I know that when I look at the portfolio, natural reaction, the red days are, oh my goodness, right? What's happening? Are we following the right, script here? Narrative? Are we experiencing some volatility? Could it go crashing to zero? I mean, anything is possible. None of this is financial advice. But I wanted to come out here and let you know that Wall Street is definitely, make no mistake, they're definitely buying. They're buying. And from the statistics, from what I currently see, they're buying more than any BTC that's being produced today, right? So approximately 900 Bitcoins are produced every day by all the miners within that network. And these guys are just coming in and buying way more than that. So eventually, if this momentum continues, coupled with the fact that in about 3 months, the Bitcoin supply will be cut in half due to its natural, programming aspects. Every 4 years, the supply gets cut in half. Coupled also with the fact that Wall Street now, given that they have the approval to sell ETFs in relation to Bitcoin, they are going to market that aspect, which they already have begun. However, it has been minimal at this point, right? We've only been about a week and some days into, the spot BTC being approved, right, for ETFs. And what that, with the numbers that's coming in, they're shifting from Grayscale to these ETFs, and in doing so, there's volatility, right, to be expected if you, know the space and you're understanding what's happening. And it's, if you see any BTC right now in the 30s, that's a decent buy. Obviously, if it drops to, low 30s, excellent. But I highly doubt we may see the mid 20s, Bitcoin again, unfortunately. And that's that'll be like a swan event, right? Like an anomaly. If something happens that spooks the market and you see Bitcoin somehow drops to 20 grand or below 20 grand, that may not even happen going forward. These opportunities are becoming less and less, especially if you peer into the future and you look at where you would be in this market in 2 years from now. It would be, quite saturated, at that point. So some of these opportunities where you can put $100, put $1,000, and, make something, 1,000 extra money. So put $1,000 in and all of a sudden it turns into 100 grand. Those opportunities may be far gone by then. Who knows? But it will be much more, difficult to come across. So typically what happens is the Bitcoin halving comes around, the supply gets cut in half, and normally you wouldn't see that anything occur right away, right? It's like probably like another buy the news, sell the rumor type of thing, where the day of the Bitcoin halving, oh, there's crickets, nothing's changed, right? However, the supply shock comes in a few weeks into months later, right? And when that supply shock hits, it also fuels the demand, and it also increases the price pressure, upwards, right? So that these things are being taken into consideration. We are pivoting towards the digital tokenization of real-world assets, which include real estate. Now, a few years ago when I did my research on real estate and the aspect of tokenization, I thought to myself, okay, something's got to give for this, almost probably about a $4 quadrillion business globally to be even considering tokenization, right? However, that crucible moment in time occurred, which was the pandemic, which was the driver for digital acceleration, right? And couple that with the advent of the AI capabilities, which is growing enormously. It's like it catapults every industry into a new realm, a new world. And that's exactly what's happening. We are in 2024. We're only 6 years away from 2030, which typically was the benchmark for when AI would be pretty much rampant and have a lot of, being well integrated with all industries, which would have taken some time. But due to the pandemic and the global reshuffling of certain financials, aspects, technology, consolidation, optimization, right? Saving of money for data centers, saving of money for businesses in relation to how they use and employ these technologies and implement them. More cost-effective ways are necessary, which leads me to also make a point about in January, technology companies are actually doing some layoffs in January 2024. So as we enter this brand new year, they're continuing with the layoffs. As we all know, the interest rate is remaining consistent in Canada. However, in the US, their GDP grew, and they may be looking to cut the interest rate. So that's something that we are considering here, but will come in probably due time, forcefully, when the Bank of Canada looks at what is on the table and our inflation numbers at that point in time. So Argentina actually they've just increased their interest rate as well, significantly. Might have been 45%. I don't have the numbers in front of me. However, going back to the discussion of volatility, this is a moment, a period in time that, other large institutions are going to be purchasing this asset at 39,000, at 38,000, definitely. And we can sit on the sidelines and hope for maybe another great moment of pullback, which typically occurs about 70 days prior to the Bitcoin halving, which is probably right about now. Within the next, I would say, keep an eye on the market within the next month and a half or so, because just in case anything happens. However, given my earlier point about the Wall Street institutions buying more Bitcoin than that is being produced, so what they'll do is they'll transfer from Grayscale to these new ETFs, and once that is over, new and consistent buying would be there, as well as the marketing uptick. As we go into 2024, this is a new market for these companies, right? So they have a few marketing campaigns right now, a few videos that have been, leaked to the public on purpose. However, they might actually turn that up a notch and have everyone talking. So 80% of Wall Street staff members that were interviewed, when they were asked, would you recommend Bitcoin to your clients and your peers? They said no. 80% of them said no, not until the ETF has been approved. So now that the ETF has been approved, literally about a week and a half ago, what will happen is they are going to start putting together and discussing marketing campaigns for their clients, right? To drive that adoption within their own ecosystem, right? Because they want to actually profit and make money from fees in this ecospace as well, right? Just like Coinbase, just like Binance for the last few years. So that brings me to that conclusion that we are on the right track, right? This space is very volatile. I have people reaching out and asking and inquiring about, hey, my portfolio is a bit down, what should I do? And typically you would have to look at where we are. So as we are in the year of the Bitcoin halving, any pullback on this asset class would be considered a buying opportunity, right? And that's coming from the elites themselves who know which money managers are getting involved in this space. So BlackRock is, they have about $10 trillion under management. So AUM, $10 trillion under management. Just think about if equities, right? Think about all their clients which have equities. If they are able to purchase and buy into a brand new asset class, which has just been authorized for, in terms of ETF. But this is BlackRock themselves or Fidelity being able to discuss what is this new Bitcoin ETF? What is this? Well, first off, it's a brand new asset class. And when you think about that, you think about the asymmetrical bet. So their clients, if they're currently holding equities or any other type of stock, what you may see is an education, right? What is this new thing? What is this new shiny thing? And after being educated by these top analysts who make probably $500,000 a year, guess what? They're going to actually buy into this new asset class as well, right? So the time is running out to own at least some or one Bitcoin, right? And that's always been the objective, to try to own one Bitcoin, try to own 10 Bitcoin, right? And hodl, try to own many more. But unfortunately, as the years go by, it's either lost, spent, or never to be acquired again, right? And time flies. So we're 4 years from this point, 4 years from today, in 2028, spring, Bitcoin is also going to be going through another halving. So think about that. Wall Street's turning up the marketing machine. The demand for digital scarcity is ramping up. It's already have approvals for ETFs just last week. Next would be Ethereum, so ETH. So that's another thing that's on the list. These corporations have already filed an Ethereum ETF application. So Bitcoin and Ethereum are leading the space. They're leading the adoption. And that's what we always thought and forecasted to have occurred, right? And once the bar has been set, and once the gates are open, that's it. It's just a matter of time, right? And that's why I want to come in and tell the audience, thank you for your time, and let you know that this is the opportunity of a lifetime to get involved and to educate yourself, to develop excellent risk management strategies that will serve you for the greater good and for generations to come. There's lots of opportunity, so stay tuned. Thank you so much and have a great day.